Hello and welcome to the Weekly Outlook at XM.com. We have important rate decisions coming up next week in the United States, the Eurozone, and Japan. How are these decisions likely to impact the US dollar, euro, and yen? I'm Maria Pachurdiz, and joining me to discuss all this is Senior Investment Analyst Marios Hadjikyriacos. So Marios, let's start with the Fed, which will announce its rate decision on Wednesday, a day after the CPI inflation report comes out. Most Fed officials are not in favor of a rate increase this month. Can you tell us why this is, and also what reaction we might expect in the dollar after the policy decision?
Definitely. Hello, Maria. So if you just look at economic data out of the US, most of it supports another rate increase next week. The labor market is in great shape. Economic growth is on track to hit 2% this quarter. The housing sector has recovered, and core inflation continues to burn hot. So the data polls argues for another rate increase, but Fed officials have expressed some caution. There's a large group within the Fed, including Chairman Powell, that favors skipping a rate increase this month and effectively postponing the rate decision until July. Now, the main factor behind this cautious approach is that the Fed is concerned about policy lags. Monetary policy takes a long time to influence the economy, and the Fed has already raised interest rates by 5% since last year. So most officials are concerned that the full impact of this tightening hasn't been truly felt yet, so they don't want to go too far. Therefore, what they really want is some extra time to examine incoming data, and they might do that by skipping a rate increase this month and pausing, essentially. Now, the markets are pricing in just a 25% probability for a rate increase. Now, this percentage might change after the inflation data, and the inflation data, of course, might influence the decision itself. But as things stand right now, I think that the most likely outcome is that the Fed does nothing this month. The camp that favors a pause seems to be larger and more influential. So that's probably what's going to happen, but it might be a split decision. There's a chance that a few officials might vote for a rate increase. Now, for the dollar, if they don't raise interest rates, that's probably negative and the dollar could move lower on the news. However, it might recover if Chairman Powell keeps the door wide open for raising interest rates in July. I think that we could see the dollar bounce back quite quickly in that scenario.
Moving over to the euro area now, the Eurozone economy has fallen into a technical recession, according to the latest data. How might this affect the ECB's rate decision on Thursday and the euro by extension?
Yeah, so for the ECB, the markets have fully priced in a 25 basis points rate increase. So that means that the euro's reaction is going to depend mostly on what they say about future rate increases, not the rate increase itself. Now, the Eurozone has fallen into a technical recession, and inflation finally seems to be cooling down. Now, in this kind of a situation, when economic growth is going downhill and inflation is coming down, the most likely outcome is that yes, the ECB is going to raise interest rates next week, but it might accompany the rate increase with a cautious message. They might preach caution and patience. The economy is already contracting. The last thing they want is to pour gasoline on the recessionary fire, right? So the market pricing currently suggests that another rate hike is coming in July. So the question surrounding this meeting is the ECB going to validate that? Which I don't think they are. At this point, what they want is to keep their options open. So what we are likely to hear from the ECB is, yes, we are raising interest rates today, but next month's decision is going to depend on incoming data. We are not going to pre-commit to anything. So if that is the message, that might come as a disappointment for the euro, considering how the markets are priced right now.
And finally, over in Japan, the Bank of Japan will announce its decision on Friday. What are we likely to see there, and how might the bank's decision impact the yen?
Yeah, so the Bank of Japan is another case where if you just look at the economic data, it's very tempting to speculate that they might tighten policy. Economic growth has turned positive, inflation is near its highest levels in 3 decades, and the outlook for wages has brightened lately. Now, the problem is that the Bank of Japan is not convinced this is sustainable. Governor Ueda has said inflation is probably going to fall later this year, and he's very skeptical that the victories on the wage front are going to persist. So, what the Bank of Japan is essentially playing for time right now. They want to see credible evidence that inflation will remain high before they start to phase out their massive stimulus program. Now, what that means is they are probably not going to do anything this month, but there is a chance that they might move in July. At the July meeting, the bank is going to issue updated economic forecasts. So that meeting is a more realistic candidate for any tightening decisions. Now, if the Bank of Japan doesn't do anything this month, that means that the yen is going to remain mostly in the hands of external forces, specifically what do foreign central banks do and global risk sentiment. The yen is a safe haven, so how do stock markets perform? That's going to affect the yen as well.
Marios, thanks so much. And thanks for joining us at xm.com for this weekly outlook.